Welcome back to the Scar Wealth Podcast. This week, we begin with a business owner in his mid-40s with around $10 million saved who keeps hitting his financial milestones without feeling any different and wants to know what mistakes people in his position tend to make. Next, we hear from a software engineer at one of the major AI companies heading toward an IPO who's trying to figure out what planning has to happen before the lockup and what can wait until after. Finally, we are joined by Matt Lutz of Flatwater Homes for a conversation about luxury residential construction from underground garages to glass-walled natatoriums. So let's start with question number one. I'm in my mid-40s, still running my business, and I've got about $10 million saved at this point. I've gotten to this weird place mentally. When I first hit $1 million, I remember thinking once I get there, I'll feel different. Then it was once I pay off my house, I'll feel different. Paid off the house, didn't feel different. Now I hit 10 million and I already know how it's going to go. For people like me who keep moving the goalpost, what mistakes do you see them make? This is a huge and common problem that exists. And it goes back into the whole money doesn't buy you happiness thing, if you want to run into those scenarios. But it does to a point, right? There's lots of research out there of marginal benefits of every dollar and how much you need. But I think the bigger problem is when you think about financial advice as a whole, we have this mental image and we're told time and time again, it's like, well, you need this number. Once you get to this number, you can retire. Once you get to this number, you're going to be done. Even when I'm working with clients, the big thing everyone wants to know is like, well, what number do I need to hit? That is the absolute wrong way to think about your finances, especially once you cross past the threshold of actual needs. And if you're worried about being able to afford food during retirement and trying to figure out where the Social Security check is being cashed and all that, that's very different. Right? That's a number type discussion. But once you start getting to the point where a lot of your expenses are discretionary, you can't tie your identity and your values to a number because that number is just going to keep getting bigger. And this is where you start to see. So to your point of what mistakes do we continue to see? One is trying to tie identity to net worth. It's never a good idea. Tying your identity to any type of monetary value never works. It's actually a risk as well to tie your identity to any type of profession, because then if you ever try to leave that profession, you feel like you're leaving your identity. So, and then never defining what you need to have from a what are you seeking? Right, I know that sounds very philosophical that we need to look at like what are you seeking for in life and what values and everything exist, but it shouldn't be number defining because you've already passed that point. So you need to start looking at what does your life look like, and then working backwards from there for what number you need. But still, that puts you in the same trap, which is exactly what you're saying. If you set this number and say, "Well, I think I'm going to need these things, and I want to have my house paid off, and I want to have a vacation home, and I want to be able to pay for the kids' down payment on homes." You come up with all of these different goals and you say, well, $7 million, I'm going to be able to do that. And then you hit 7 million. And then you've done all those things, but you still move the goalpost again. You say, well, once 10 million, I'll be happy. I'll be able to do this. And then you're just going to keep increasing your goals. That's not necessarily a bad thing if you realize that you just enjoy the game. And that's really what happens. And it definitely happens with entrepreneurs. And you're in this range. You're mid-40s. You're not retiring anytime soon. In fact, if you're a business owner, the odds that you retire anyways is really low. You're going to want to continue doing something. You enjoy building a business. You enjoy doing all of this thing. You want to continue the battle to go forward every day. So that puts you in a really weird spot because everything out there is telling you that you have to retire once you hit a certain number. You have to do this. What I would encourage you to look at is realize that you probably just enjoy the game. And the problem that makes this harder is that you enjoy the game and you're getting better at the game. So you're able to make money now. You're able to have processes in place that you've worked for. So it's easier to make more money. And you look at it and say, well, if I stop now, I'm giving up all this potential for that next level. So I would take a step back on this one and realize that you're beyond the point of worrying about a number. The number is irrelevant now. You already have the number. The number's done. That box is checked. Now you just need to get that out of your mind and start thinking about what does life look like now? What do you like to do? Or what is the game that you like playing in the business? And then go into work realizing that you're there playing for fun. No one's keeping score anymore. And if you're going to continue to keep score, it can still be fun. You can still accumulate the wealth and go up, but the marginal value of every dollar you're adding at this point is not changing your life whatsoever. And that's why you're getting to the situation where you continue to have more money and you're still in the same spot mentally because you continue to have more money and the value of every additional dollar afterwards is just not there to you. And that's not a you problem. That's just a how money works problem when it comes to marginal value. So I think it's time to step back a little bit, do some of that wonderful soul searching of what it is that you enjoy, and then start answering those harder questions of what you're actually looking for in this next chapter and post that $10 million mark. All right. And our next question. This is a good one. So I'm a software engineer at one of the big AI companies. I joined about 3 years ago, and we're heading toward the largest IPO in history. If everything holds, my position is going to be worth somewhere north of 15 million. I'm 31, married, no kids yet. Got friends at companies that already had tender offers cash out. They all seem to have done it differently and have very different opinions about what should be done. What should I be doing right now before the IPO, and what has to wait until after? Everyone's going to have opinions on this. And this right now in history is a really interesting time because we're getting into an IPO wave. So a lot of people don't know. They think it's random. IPOs happen in waves because it's when there's cash available for investors to add to risky assets. IPOs typically risky. Companies going public for the first time. So what ends up happening is if you're thinking about it, your position or think about being in their position from the company, if you were trying to go public and you're trying to raise money, when is the time to go raise money? Do you raise money when no one wants to invest anything and everyone's scared about the outlook of the economy? Of course not. You do that, no one's going to invest. Ideally, you go when everyone's just throwing money around hoping about the future. Everyone's excited about the future and they're just throwing money at whatever company has AI associated with it. And by doing that, you're able to get more money per share of stock when you go public. So that's why we see this happen in waves. We'll see a lot of companies IPO at the same times. And then you'll have other years, look at 2020 with COVID. No one's spending money. Everyone's very risk averse and IPO market is dead, right? No one's going public. So in your case, we have this wave right now. We're seeing this with SpaceX. We're seeing this with Anthropic. You have OpenAI. This is a common discussion being brought up right now because a lot of people have private shares, as in your case, that you've held. You've been compensated with all of this equity, whether it's through options or direct equity, the RSUs. And now there's an opportunity for a liquidity event. And this liquidity event is about to create a significant amount of millionaires and billionaires. And it's going to be a crazy time for us. Now, in your case, what that means is planning needs to start. And I don't want you to wait until after a lockup period for you to go in and start being able to sell or at least know what you own. So the first thing we need to do is take a little bit of an inventory of what you have going on. Do you have RSUs? Do you have stocks that's already been vested? Do you have ISOs, NSOs? The one that tends to throw people off are the ISOs, right? The incentive stock options. So your employee, your paid stock options. And for those unfamiliar, the concept of a stock option is the right, but not the obligation to buy a stock at a certain strike price by a certain time. So in other words, let's say I have a company and it's trading right now at 75 bucks a share and I give you options at 75 bucks and then it goes up to $100. Well, you're $25 in the money. You could exercise your option today, buy it for 75 and then go sell it for 100 and you'd make $25. What ends up happening is the government allows you to take that spread between the strike price and the actual value of the stock and will count that as income. And you say, that's fine. That's money you made. That's not a big deal. It is a huge deal. And I'll give you an example. Let's use a more extreme example. Let's say your option is a strike price of $1 and then the current market value of the stock is $100. So now you have $99 in gain that's going to be embedded. So the day you go and exercise that option, you're going to exercise it $1. You say, that's great. I now own this stock in my account. I paid $1 for it, but now it's worth 100. So you have $99 of gains. But have you received any money? No. You have no liquidity whatsoever right now. All you did was exercise an option to buy the stock for $1, and now it's worth $100 in your account. So everything sounds okay there, except the government realizes that you just had a major event that's beneficial to you. So they have this horrible thing called alternative minimum tax. And what that means is they look at that and say, wait a minute, you just had this go from $1 to 99. So you were, or 100. So you have a $99 discount that you were given on this $100 stock. What we're going to do is we're going to have you pay tax on that $99. The problem for you is going to be, where are you going to get the money to pay the tax on that $99 because you haven't sold the stock yet? So AMT can be really dangerous, where a lot of times you'll see that in combination with RSUs, where people take the RSUs that have been granted and invested, sell those, and use that cash to pay the taxes and for the option in their account. The other follow up to that is if that's the scenario, then why wouldn't you just sell? You look at that and say, well, that's great, Stephan. I go from $1 to $100. I'll just sell the stock at $100. This is where the ISO factor really comes in. If you can hold on to that stock for 1 year from the day you end up going through and exercising the option, or 2 years and 2 years from the grant date, so it has to meet the 1-2 rule there, then it's long-term capital gains on that $99, which is great. So you'll see a lot of people, and this is why what I mean by saying you need to start thinking about this early, is you may want to go and exercise some of those options now because they're at a lower price. So being at a lower price, that's less AMT exposure that you're going to have. Plus, now you start that clock for the next 1 year, assuming they've already been granted 2 years ago, before you can get that long-term capital gains. Huge benefit, but one that really throws people off when you have this AMT exposure because you didn't actually create any liquidity, yet the government is very much expecting that liquidity in the sense of tax dollars. So that's a big one. The other things to think about, obviously concentration risk, we talk about it a lot when we get into any of these situations. You're likely going to have a significant concentration in one stock that is also tied to your actual human capital, your ability to earn. So that's a dangerous combination. We want to get rid of that. Not saying you have to go sell everything today, but it is time to start thinking about what is the path forward of getting out of this stuff as opposed to waiting till later and then finding out there's holding periods afterwards after the lockup that you want to get into. If you're charitably inclined, you also have the DAF scenario. If you're expecting a huge tax bill this year, maybe you go and start giving to a DAF. Some of the companies you're talking about have different arrangements where they'll match charitable giving and put it in your name and all those types of things. Time to start having those conversations because you're going to end up in a situation where there's a huge tax bill that you could mitigate some of that tax exposure by just planning out early what those ISOs look like, what your RSU vesting schedule looks like, how much concentration are you going to eliminate, how much you actually need in your account outside of this concentration, and whether or not there's some games to be played with the charity side to help with gifting and a DAF. So lots of good stuff, but now's the time. You need to start building a team, start thinking about who's around you and what type of plan is going to be in place because it's going to affect everybody. It's going to affect your financial plan. Right? It's going to affect your attorney and your estate plan, and it's absolutely going to affect your tax planning as well for the next couple of years. At Scholar Advising, we work alongside your full financial picture as independent thought partners for a flat fee, not as account managers or product sellers. We help you think through the options, stress test the decisions, and build a clear path toward your long-term goals. Visit scholaradvising.com. All righty. And in this week's From the Field segment, we're joined by Matt Lutz, Managing Director of Flatwater Homes, a luxury residential construction firm with more than 40 years of experience in some of the most technically extraordinary private builds in North America to his name. Matt brings both a builder's eye and a financial background to every project. Matt, welcome to the Scholar Wealth podcast. Why don't you, to start off, to kind of frame a lot of the conversation we're going to have today, right, give us your background, right, how you got into the business, right? Where does Flatwater Homes come from, and what type of work do you do?
Sure, sure. When I was a kid, I started working in Colorado in building complex foundations. I think I started when I was about 15. And I always said I never wanted to work in construction. And then I went to college. And when I got out of college, we moved to Seattle. And really, the only work that I could get at that point in time was being a laborer for a mason. And my very first job, I was doing labor work on Gates's house. So this was right around the early 90s when we moved up in there. And over that period of time, I got more and more involved with the carpentry and working in super luxury homes of that nature. I did work in the yacht industry as a carpenter as well, which was amazing. And then I had a client, a very influential client, convinced me that I needed to go to graduate school. So he got me to go to graduate school. And then when I got out, I started working in industrial construction. So I moved and lived around the world doing mostly very large oil and gas projects. And I took a job to work in an electrical holding company. So I was working in an electrical holding company, and when COVID hit, I decided I wanted to go back to my roots and get back involved with luxury residential. So when we started the business, we started it right in June of 2020, right when COVID hit. So that was a great experience. And the name of the company is Flatwater because when I used to race kayaks, my mind was the most quiet when I was training on flatwater, not necessarily when I was racing whitewater. So we wanted the experience that clients have to be predictable and flat, and that's how we came up with the name.
That's great. Yeah, a very opposite theme of most construction projects, and I think most people describe the whitewater aspect of any construction, especially when you're getting into these areas that are unknown or haven't been done before. So I like the tie in there to the kayaking. So, can you tell us about? I know one of the projects that I was really interested in is you recently completed a natatorium for a family, right? Lots of a lot of technical aspects to it. Can you walk through what that project is, or what a natatorium is? Because I had to look that one up beforehand. So maybe
Yeah,
go into that and then start building from there of not only what it is, but how you go about building something like that, and I guess broader of into things that just are starting from the ground up, very complex, but also completely uncharted waters. If we go back to the flat water.
sure, sure. First off, natatorium. Everybody in the team and pretty much every subcontractor calls it the pool house. So there you are. That project started out being designed probably 4 years before we actually built it. It was in a downtown setting, it's very dense. There's really no ability to get in or out of the place, and it's in a residential setting, so we have a lot of residential traffic, people going to school, deliveries, etcetera, going up and down the street. And it's also in the backyard of a historically registered home. So the project had to undergo a lot of historic approvals. It's a fairly contemporary looking structure. So the house is was built in the late 1800s. It's red brick with a green tile roof. It's amazing. The property, all the other outbuildings are that. This structure has a new garage, a kitchen, and then the natatorium or the pool house. The garage and the kitchen are a very black brick that we had made in North Carolina. And then the pool structure is 100% glass. We went out to 2 or 3 different custom glazing design houses. We ended up choosing one in Wisconsin, and they designed all of the glass panels. They're about each panel is probably close to 1,000 pounds, and it covers the whole area. And then we have a nanowall system that goes all the way around, and I believe nanowall when they helped us work on it. They said it was the biggest residential nanowall project outside of Lambeau Field that they had done. So it was a really fun project. But outside of that, what was really interesting to me was the logistics. We had to dig a mezzanine for all of the equipment. One of the goals that the client really wanted to focus on was to make sure it wasn't like a hot house or really humid. You know, you go into these pool
Yeah,
houses
absolutely.
and they can feel really humid. So we put in a really interesting HVAC system. You can't see it. There's really no vents. There's some vents right around the outside on the floor, but they're continually circulating air and you really don't feel it through the winter, spring, summer, thunderstorms. We've never had any condensation on the glass. It's actually very, very comfortable. That's incorporated with a hydronic floor heating system. So it's always like 72 degrees in the building, regardless of how hot the pool is or how cold it is outside. And then the other thing that was really fun about the project was the client wanted to use an oxygenated pool system. Most pools are chlorine. You'll see more and more clients use salt. This system uses a method to clean the water using ozone. So it makes its own ozone, circulates it through the water. And so there's no chemicals. It's really amazing water. So those were really fun projects. all of the mechanicals are underground and they're actually below the water table. So we had to build a mezzanine structure down below that, and you enter that through a back room, and you can go down in there and work on the equipment, do whatever you want. No one ever knows it. They never hear about it. They never see it. So that was a fun project.
Yeah, it sounds amazing of just multiple levels to this whole process. When you talk about the size of it, like what are we talking about square footage here? Because you mentioned that this is one of the largest glazing projects in the United States.
That's what Nanowall said. A Nanowall project. I don't- it's a big structure, but it's not enormous. You know, it's a full pool, but the pool itself is probably 60 by 30, and then there's space all the way around it with very large stones all the way around that, and then there's a really nice living area on the backside with a fireplace and electronics and whatnot. And that's all covered under the glass. The side of that is a kitchen with laundry facilities and entertainment facilities. So I think it's probably 5,500 square feet, maybe 6,000 square feet. Really big garage pop to the side. That was pretty fun to do as well. So those are kind of three tied together buildings, and you walk between them.
How do you balance when you're talking to families about something like this, a project that has every element almost as something that hasn't been done before, and you're going through all of these different customizations? How do you balance, especially when you're dealing with a historic home, the budget from a aesthetics perspective versus a continuing with the historic properties of a home, and then also balancing in the technical aspects and technology components of you need this stuff to last for a really long time, I would imagine. So, what does that conversation look like when you're trying to design something like this?
One of the things that's odd about what you just said is on our new builds, we'll offer an indefinite guarantee. So as long as we maintain the property, we guarantee that it's going to work as intended as long as it's maintained, right? So that's really important to us. And when we go through the process, we do everything we're very transparent, and we do everything open book. So, for instance, with the pool, I think we had four different subcontractors provide proposals to us for that. And we go through a cost benefit analysis, looking at the costs and the maintenance and how they're going to construct it and who's good, really kind of like having a score sheet, you know, and so we'll recommend this person uh, or entity to do the work, and we'll sit down with the client. We have an OAC, owner, architect, contractor meeting. Try to do it every 2 weeks, depending on the client. Sometimes it's once a month, sometimes it's every week. It really kind of depends on what the client needs. But we'll go through the budget in those meetings. So we'll go over the schedule, we'll go over quality, and then really we're spending a lot of time looking at all of these different choices. This is what the green tile looks like. This is what the blue tile looks like. We'll mock that up. We'll say these are the costs here, these are the costs there, and this is how it impacts the rest of the house. And we'll go through that selection process with the client. Some clients are really engaged in that and they have a lot of fun. Other clients default to their design team. So we don't do any design build. We only work with professional architects or professional designers, which I think is critical in this type of construction. Design build is, in my opinion, is great for industrial work. It's great for commercial work. It's probably the best for industrial work. For luxury residential, you want to be a great builder or a world-class designer, but mixing those two is difficult. So we really rely on our design team to come up with the ideas. We price them out. We tell them how it's going to perform. And then it's up to us to execute the vision directly, exactly how everybody wants it. So we'll spend a lot of time doing that. We spend a lot of time mocking things up, testing things, and going through that to have those discussions with the client.
Another project that I think showcases this idea of maybe the consulting side of things is a garage you built, a 30-car garage, and you had Haggerty, who's been on the podcast before, consult on humidity, the collection, and everything. Can you walk through that project with us on what that looks like, and when do you pull in designers in that? I imagine it's a constant evolving process when you start to deal with this because the 30-car garage. I mean, this is also underground, right? So this is a 30-car
Yeah,
underground garage.
there's a lot of consultants on that, and the quicker you get your team together at the front of the project, the better the project's going to go. That includes architect, designer. Some people have interior designers, lighting designers, sound engineers. In this case, we had an architect, we had an interior design team, and then we used Haggerty for some of the HVAC controls to help for the cars. We also used 3 or 4 different types of engineers for waterproofing because that was a big deal, was waterproofing it. You're underground. And we also brought in Chubb Insurance. So Chubb Insurance, and we find a lot is the homes that we do, we try to really bring in the insurance companies early on because they have a stake in that property and how that property performs, whether it's cars or artwork or whatever collectibles are in those homes. So the sooner we get everybody on board, the better it goes. And that should be several months before you even break ground. If you can get everybody on the same page, starting to have these conversations in a structured fashion, it works out really well. If you try to bring them on halfway through, or you get rid of your architect because you don't want the to pay for their fee, or you bring in a designer halfway, that creates friction. There's good friction and bad friction. The good friction is when you have a design team and a contractor and an engineer, and they're arguing about the best solution to come up with the best solution for you, your home, and your lifestyle. The bad friction is when someone comes in and then you get involved with turf wars or design changes or things of that nature. So if you can get the team set up upstream, knowing that there's going to be some good friction, that's when things really start to work out, and it becomes a more rewarding project, I think, for the clients in the end.
How long does a project like that take for, in that particular case of going through building out the team
Yeah,
to breaking ground and then breaking ground to completion?
it really depends on a lot of different things. The construction of the projects usually isn't that bad. I mean, you can usually do really good construction on very large or complex structures in 2 years. If they're extremely complex, maybe 3 years. It's the design that goes into it and the thinking that goes into it upstream. So if you're dealing with historic commissions or a lot of environmental things, we're doing a job in a conservancy right now that has a lot of movement in a conservancy. That could add a year to the front end planning of that job. But the construction of it usually isn't too bad. It's more of the more time we spend up front, the better the construction goes. During the construction, the better the handoff is at the end of the job. I would prefer if we spent the time up front because it makes the construction easier and more simplistic. But you can build a really nice large home in a couple years if things are well planned.
When you look back at kind of your portfolio of projects that you've either have going on now or have undertaken, what are the ones that stand out to you as being the kind of the most remarkable or the most unique that hasn't been done that I think would highlight some of the things that you've accomplished?
There's probably 3 jobs I can think of. One, when I was a carpenter, I was asked to be a carpenter along with a really seasoned superintendent who was older than me to build a tea house in Seattle for our sister city of Kyoto. So I learned how to do joinery and build things without fasteners using traditional Japanese joinery. That was amazing. The other project would have been the boat Aviva I worked on. I was just a carpenter, but I really, really learned a lot about service and what it means to build at a very, very high level. That experience probably taught me more about what we try to do at Flatwater. We have 3 required readings here at Flatwater for all employees, and one of them is reasonable hospitality. So we really try to focus on that. And when I think about that book, it goes back to my experience in the yachting industry. And then the third one, which is actually kind of funny, a lot of my employees tease me about it, is the pool house, the natatorium. I've built and worked on some of the most amazing jobs, I've ever had a chance to, but that's the only project that I would say, if I had to own one of these things and had to maintain it and live in it, that would be it. It's an amazing project. It's really, really fun. A couple years ago, it was really fun. The client wanted, I'm sure you've seen these Himalayan pink salt walls on Instagram or whatever. And he said, well, I want that in my sauna. And I said, okay, great. No problem. So we started down the path of figuring that out. And we quickly learned that those little pink blocks that you see, which are food grade salt, are about anywhere from $10 to $15 a brick. And so to do that wall was getting expensive. And I said, well, this doesn't make sense. This is salt. I said, I bet you I can do this for less. And then so I ran down the rabbit hole with our project manager, and the client didn't know anything about this. He's just like, yeah, it sounds like it's too expensive, but we didn't stop. So we found out a lot about salt. We learned a ton about salt. There's actually pink salt and then there's blue salt. Blue salt has a lot of cobalt, and you can actually get blue salt bricks, but the only place to do that from what we found out was in Iran. So that kind of put that off to the side. But we found a big mine in Pakistan and we said, we need 500 bricks. Can you send them? He said, yeah, no problem. I'll send you what you want, but you have to buy a container. So I kind of scratched my head and I said, okay, well, I'll buy a container. So I just bought a container, the bricks. They showed up at site a month later, giant container. The client was scratching his head. We unloaded all the salt. It allowed us to pick the salt we wanted and make a color. And then it allowed us to have enough salt that we actually cut them into thinner rectangles so that we could do a herringbone pattern. We believe, we don't know, but we believe it's the only herringbone wall in North America because we haven't seen any other ones on the internet. And we did it for free because I had all the salt, all the excess salt sold before it hit the ground. So it was sold to one of the distributors. I just sold it for like 90 cents a brick. I didn't really care. I just said, we just want to give this client a really fun project. And that was fun. We try to do that on every job.
That matches perfectly with the unreasonable hospitality aspect there. So that's required reading here at Scholar Advising as well. When you have that kind of mindset of working with clients in the hospitality side of things, do you find that that is showcased more in the type of work that you're doing, or just the relationship with clients and working through those projects?
I think it's different for each person in our team. I think we joke around a little bit that we have a very neurodivergent team. So everybody's got something they're really interested in. They're really good at tile or they're really good at paint. Our belief is that, the best subcontractors in the world, the best, do 98% of the scope of the work that they're hired for. So it's our job as general contractors to do the other 15 to 2%, whatever's left over. So we end up getting involved in all different trades, all different types. And some people in our team really gravitate towards trying to figure out what is the technical solution to deliver on the client's vision. And other people on our team really try to get in to what's the client's vision, right? And then the two come together and they usually work with the design team and off they go. So it's a collaborative effort. I don't think one is more important than the other, particularly with our warranty program. It makes it really hard to not have a focus on the technical aspects of what we're trying to do because the vision sometimes can be executed without the technical nature, but we're always trying to put the two together so that we have a solution that's going to live for as long as the client wants that solution to be around.
Yeah, that makes sense. And I think when you go in from the carpenter side of things, when you think technical execution, what what are the things that stand out to you where if you walked into a home today, you'd be able to start pointing things out and say that is done correctly, or this is a common misstep that someone's gonna fall into.
Anybody can be an armchair quarterback, I think is what they say, right? So anybody can point out all the flaws. You can walk onto my job. I have one client who teases me all the time because I never go back to the jobs I finish unless I have to do work there because I psychologically can't walk into those jobs because I just get frustrated with every mistake I made. And he loves it. He thinks it's hilarious and he likes to invite me over and says, how many mistakes did you make in this room? And so I think it's easy to point out the mistakes. It's a lot more challenging to figure out how to not have the mistakes happen in the first place. So we spend a lot of time on critical thinking in our firm. How do we avoid little mistake? So we just had an all hands meeting. If you see something, say something. So there was a piece of trim. It was like a quarter of an inch out. This was in a project that we're doing in downtown Denver. I was just there last week, and everything was painted. All the plaster was in. And I said, "Well, this doesn't work. So we got to pull it out, redo the trim, repaint, replaster that area." It's not a big deal. It's only a day's worth of work, but I can't charge the client for it because it's rework. And it's something we could have caught 4 weeks ago, and two people on the site saw it. So I think you're always going to have mistakes, but what does your culture do? Say, okay, well, how do we avoid them? You got to spot them before they happen. And if you spot them up, like all of our sites, we try to run like more of a commercial organization than a residential organization. So all of our jobs have an on-site superintendent the entire time. And it's his or her job to make sure that they are looking for those quality issues, speaking with the client or speaking with the design team to make sure that the vision is going on.
You've mentioned the warranty a few times that you have in your projects. If you could give us a little insight into what that actually looks like when working with a family continuously after a project like this.
Sure. Try to maintain all of our homes. So we have a maintenance program, and depending upon the family and depending upon the house, some of those houses are used a lot. Some of them aren't used at all. Might be used a couple times a year. Yeah. So we are in the homes sometimes once a week, sometimes once a month. We go through a maintenance checklist. We notify all the things that are going on, whether it's a drywall issue or a cleaning issue or a plumbing issue. And we say, well, this is what we should do to fix it. This is what we should do. If it's a warranty issue, like if it was bad workmanship on our site, we'll just fix it, say it was gratis. If it's changing filters or if it's making sure that the sprinkler system's blown down, then we contract that out. And those are the critical things that are necessary to maintain a home. Inspect the roof, inspect the ventilation, inspect the windows, the paint, all the plumbing, and going through that. And if you stay on top of it, your house should last as long, depending upon the damages or whatever, should last as long as you want it to last. And those are the things we look for. And we work directly with the client to make sure that the home is maintained, and where we make a mistake and it shows up, we fix it.
Perfect. Well, I appreciate you sharing that and some of the stories today of how you make these projects come to life. So thank you so much for joining us today, and forward to talking to you soon.
Thanks for having me. I really appreciate it.
That's our show. Thanks for listening, and we'll see you next week.
The information provided in this podcast is for general informational and educational purposes only and is not intended to constitute financial, investment, or other professional advice. The opinions expressed are those of the hosts and guests and do not necessarily reflect the views of any affiliated organizations. Investing in financial markets involves risk, including the potential loss of principal. Past performance is not indicative of future results. Before making any investment decisions, you should consult with a qualified financial advisor who can assess your individual financial situation, objectives, and risk tolerance. Thanks for listening.